Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of previous monthly resistance that is now turned support. In fact, from here, this previous move to the downside was created. After that, the market broke above that zone and this previous resistance became support. The market has now tested this previous resistance turned support and started rejecting it to the upside, exactly as we would expect in a situation like this, because this was not only previous resistance turned support, but it was actually a confluence of support, because from a pattern standpoint, as we had this impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we had a perfect 50% retracement lining up exactly with this previous resistance turn support, creating a confluence of support at this level, which we could in fact expect this market to test and then to reject to the upside. So from a monthly perspective, we could expect more bullish continuation and for the market to potentially create a new monthly higher high. Dropping down on the weekly time frame, what do we have? From a weekly standpoint, we can see how the market has now broken above the previous high. This level of previous resistance from which all this move to the downside was created has now been breached to the upside. And in a situation like this, we can see how with this wick, the market has already retested the level. And from here, more bullish continuation could be expected. From a daily perspective, what do we see? Now, here on the daily time frame, the structure is very clear. Now, first of all, I did speak about USDJPY quite a few times in the past. I spoke about it when the market was here and I explained all the reasons for which we could expect this move to the upside, and that is in fact exactly what the market gave us. Then, after this impulse from here, I made another breakdown explaining all the reasons for which we could expect first this correction and then from here the continuation higher. And again, that is exactly what the market gave us. And then from here, I made another breakdown explaining all the reasons for which we could expect the correction to this area and from here this rejection to the upside. And again, that is exactly what the market gave us. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. However, going back to the current price action and structure, what we must identify is that at the moment the market has just completed a 5 waves pattern. We had the first one, wave 1, 2, 3, 4, and 5. Usually after 5 waves, the market goes for a deeper correction. So looking immediately for the continuation higher is a bit more risky. It's not that the market cannot do it because we have a very strong trend, so that is definitely a possibility, but it would be better to have first a deeper correction and then the continuation to the upside. Specifically, what would be very interesting is if the market creates a correction back to this area, which was previous level of resistance from which these two rejections to the downside were created, that now that the market has broken it to the upside is currently turned support. So if the market here will create a correction back into this level, that would be very interesting because in creating the correction, the market would also print an M pattern. And in general, after the creation of an M pattern, what we could expect is a potential move higher for the completion of the M pattern at the neckline, which is the previous support turned resistance. So here in the daily time frame, if the market here would create a correction to this level, at that point we would have quite good probabilities to see a potential reversal higher away from the zone, potentially completing this M pattern at the neckline. Now, if we go and see what we have when it comes to the commitment of traders, so what institutions are doing, so this is COT data, and we look at the data precisely for the JPY, we can see how with the last reports we went from minus 77k net positions down to minus 80k net positions. So institutions are now once again starting to move to the bearish side of the JPY, and a move to the bearish side of the JPY means that USDJPY is supposed to get stronger, fueled by this institutional longing of the USDJPY by shorting the JPY. So this means that if we get a correction to this zone with the creation of this bullish price action and bullish pattern, at that point inside of here, we could see more institutional longing, at that point further increasing the probabilities of a potential rejection to the upside and completion of the daily M pattern. So if we will have a correction to this level, how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the completion of this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the program you open an account with them, you can get a full refund credited back into your trading account. And if you scroll over, you will see that there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description and I will see you in it.
If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.